Hello and a warm good morning. You're tuned into Market Cafe. I'm Ankita Saxena, and in the next half an hour, I'll take you through all of that transpired in the global front, the geopolitics, the markets, and the cues you need to watch out for before the start of D Street. Before that, before we get down with the entire show, let's take stock of how the Wall Street shaped up. Well, massive cuts coming in across Wall Street. In fact, look at Dow Jones. That was trading down almost 700 points, 1.3% cut coming in. S&P 500 down 200 points, 2.6% cut, and Nasdaq saw a massive drawdown of more than 1,100 points, 4% cut coming in on Nasdaq. Now it's a tech rout that we saw coming in. Now, why this sharp fall on Friday? Now, what happened was that we were expecting the jobs data to come out from the US, and the jobs that were added for the month of May was more than what the street was penciling in, which means that the labor market is strong, and therefore that brings down the expectation of a rate cut, which means higher rate cuts are likely to persist. And all the companies, the companies that have raised debt or to fund their AI plans, for them, the financing cost is going to get more expensive now. And of course, on the back of that, it will have implications on their margins and their guidance also. And also, we saw Broadcom that came out with its guidance, and that was weaker than what the street was penciling in. So we saw a tech crowd across board, and Nasdaq saw those massive cuts of 4%. So a sharp fall coming in as far as the Wall Street is concerned on Friday night. So that's how the Wall Street shaped up. But even the oil prices, they were relentless. In fact, oil prices also jumped over 3% on the fact that Iran has now attacked Israel, and there is renewed strikes that's going on. So crude saw a rebound on fresh West Asia tensions. In fact, OPEC Plus also came out and said that they have agreed to increase the targets by 188,000 barrels per day from the month of July. So we'll get you more on that. For that, my colleague Ashesha will join us. But for now, as far as crude oil is concerned, we do see oil that's sitting at Brent crude that's seeing an uptick of 3%. It is hovering above the $95 per barrel mark right now. And WTI also sitting with gains of 3+% on $93.39 per barrel. We do see the bond yields also that have spiked up. 10-year Treasury yield that has climbed 4.5%, and 30-year yield also above the 5% mark on account of the hopes that the Fed may not cut the interest rates, or the interest rates remaining elevated, and that has had a ripple effect on the markets and sharp cuts coming across even the Asian markets. We'll discuss the Asian markets later, but let's get on board. Ashesha is joining us on the fact that OPEC Plus has approved the 4th consecutive oil production quota increase, raising July output targets by 188,000 barrels per day. However, the move has remained largely symbolic as the closure of the Strait of Hormuz continues to restrict exports from several Gulf producers. Ashesha is now going to give us more details on this. Over to you, Ashesha.
Well, yes, oil market continues to remain in focus today. The overriding factor, of course, is the fact that the tensions in West Asia continue to escalate, and that is the reason oil, Brent crude, has surged nearly 3.5% in today's trade, and it is now trading above that $96 per barrel mark. We had seen some bit of cool off over the last few days, but we have again seen heightened volatility, indicating that perhaps the war in West Asia is not ending anytime soon. Strait of Hormuz continues to remain a key crucial choke point for global oil supply, and that concern continues to weigh heavy on the global oil market, and that is the reason we have seen a 3.5% up move in oil prices this morning. But since you were also talking about the OPEC Plus decision yesterday, OPEC Plus decided to go ahead and increase output by another 188,000 barrels per day with effect from July. Now this, remember, will be the 4th consecutive month of output hike that has been decided and to be undertaken by the OPEC Plus group. This follows a 188,000 barrels per day output hike that was undertaken in the month of June itself. And in the month of April, May and June, for 3 months of this quarter, OPEC Plus has already announced 6 lakh barrels per day, cumulative 6 lakh barrels per day output hike. So yes, big move that has come in from OPEC Plus, but the overriding factor is the Strait of Hormuz decision and the blockade that continues, and that is the reason oil market continues to remain in focus.
All right, Ashesha, thanks so much for joining us with that move coming in from OPEC Plus. But let's talk about the Asian markets and the big drawdown that's coming in on Asian markets. Also, Asian handover also looks very negative. In fact, South Korea's Kospi took the massive most hit right now. It is plunged to almost 8% in the trading session. Kospi is trading down with cuts of 8%. Shanghai is trading down 1.1%, Hang Seng is down 1.5%, S&P ASX 200 down 0.7%, and Nikkei is also trading with cuts of almost 4.5% on the back of fresh attacks by Iran and, of course, the elevated bond yields that have kept the market on its toes. So that's how the Asian market is shaping up. And even the implied start to Nifty is suggesting a massive cut, a gap down start of more than 300 points on the Nifty as well. So that's how the market is. It is going to be, we are penciling a bloodbath in the market on today, in Monday morning. But let's talk about the fragile US-Iran ceasefire that is under fresh strain after Iran reportedly launched missiles at Israel in response to Israeli strikes near Beirut. Tehran says that the ceasefire was always conditional on peace holding across Lebanon, while Israel maintains its Lebanon operations are separate from the Iran negotiations. Trump is now urging restraint, reportedly telling Netanyahu not to retaliate as Washington tries to keep a broader peace deal with Iran alive. And a fresh point of friction has emerged as US-Iran negotiations, with Washington reportedly exploring the use of Iranian assets to compensate Gulf allies for war-related damage. Tehran is simultaneously demanding access to frozen assets and sanctions relief as a part of any eventual peace agreement. And meanwhile, Trump told reporters that the US will continue to get a lot of oil and there's no concern over the prices. Let's listen in.
A lot of oil is coming into our country. A lot of oil is coming into the world that people don't even know about. And that's why it's at $97 a barrel instead of $300 a barrel. And when that whole thing is straightened out, it shouldn't take long. One way or the other, it's going to get done. And when it's all straightened out, you're going to have oil prices drop down to maybe even lower than they were.
And well, the global airlines have sharply cut the 2026 profit outlook as the Iran war drives fuel prices higher and disrupts major air corridors. The IATA now expects industry profits of just $23 billion, nearly half its earlier forecast of $41 billion. Airlines face a double hit from the surging fuel jet costs and longer flight routes due to airspace restrictions, forcing carriers to protect margins through capacity cuts and higher fares. And Trump has publicly pushed back against the expectations of Federal Reserve rate hike, arguing the strong economic growth should not be punished with higher borrowing costs. His comments come just ahead of Kevin Warsh's first Fed meeting as the chair after a stronger than expected jobs report prompted the markets to price in tighter monetary policy. Let's listen into what he had to say.
Unfortunately, we're in a world where for the last 15 years or so, when you have good numbers, the market goes down. When you have bad numbers, the market goes up because too much emphasis is placed on inflation. And you don't have to have inflation by having growth. And we have great growth, and that doesn't mean inflation. In fact, it could be anti-inflation growth. So I hope the market starts to learn that when you have good numbers, the market should go up, not down. Torsion.
Yes, sir. Given those job numbers, do you think the Fed should come rate at its next meeting? And do you think New Chair Kevin Warsh can...
Well, I'm going to let Kevin make that decision. I'd like to see lower interest rates because each point, think of this, is $600 billion. Okay? So, you know.
And moving on then, the South Korean President Lee Jae-myung has nominated Han Seok-books on as the Prime Minister, potentially making her the country's first female Prime Minister in 2 decades. A former CEO of the internet giant Never, Han is expected to play a key role in South Korea's AI and technology agenda as the government looks to leverage its semiconductor strength and digital economy leadership to drive the broader economic growth. The role of Prime Minister is largely ceremonial and administrative under the South Korea's presidential system. And Alexander Zverev has finally broken through at the Grand Slam level, defeating Flavio Cobolli in a 5-set French Open final to win his maiden major title. The victory ends years of near misses for the German, who had lost his previous three slam finals. Now, Zverev became the first German since Boris Becker in 1996 to lift a major trophy and caps a remarkable journey marked by injuries, heartbreak, and repeated questions about whether he could win the sport's biggest prize. Meanwhile, on Saturday, Mira Andreeva won the first Grand Slam title by downing a Polish qualifier Maja Szwalinska in straight sets in the French Open final. The 19-year Russian became the youngest Roland Garros women's single champion since Monica Seles, then aged 18. And in a stunning display of talent and composure, 19-year-old Kimi Antonelli has taken the Formula One world by storm, becoming the youngest ever winner of the Monaco Grand Prix. The Italian teenager continues his remarkable rise, securing a fifth consecutive Grand Prix victory and further strengthening his lead in the Formula One World Championship standings. As if that wasn't enough, Antonelli has also etched his name into the record books as the youngest driver in F1 history to achieve a Grand Slam, taking the pole position, leading every lap, setting the fastest lap and winning the race as well. Welcome back. You're tuned into Market Cafe. We're getting you all the cues you need to watch out for before the start of D Street. And let's talk about the stocks that will be in focus in today's trading session. And for that, my colleague Avi is now joining us. Avi, take it away.
So discussing some of the stocks that could be in news today, we would like to start from the likes of TTK Prestige, Stovecraft, Butterfly, Gandhimathi on the back of LPG prices rising by rupees 29 per cylinder, which will be effective from 7 June. On the back of rising prices of LPG cylinders, people will look for alternative cooking solutions, which will lead to these stocks buzzing. Up next, we have NIIT, wherein the promoters have purchased around 1.43% of stake additionally from the open market between 1st and 4th June. This raises their total holding to now at around 40%. Up next, we have Pine Labs, which would see some selling pressure on back of Invesco, a developing market fund selling at around 0.7% of their stake, worth 100 crore rupees at around 145 price per share. So they've sold this stake out of the 2.35% holding. It is also important to note that Pine Labs had raised around $100 million from Invesco fund before their IPO in September 2021. Up next, we have EMS, which could buzz in the positive since it has emerged as an L1 bidder for construction work worth around 100 rupees in Varanasi. This project involves surveying, design and supply of materials, and it has to be executed in the next 24 months. Up next, we have KNR Constructions, which could be buzzing in the positive since it has bagged orders worth 3,300 crores for mining contract in Chhattisgarh. And our last stock is Railtel Corporation, which has also bagged an order worth 40 crore rupees from UP Police Department for developing surveillance and security products for their upcoming exams.
All right, Avi, thank you so much for joining us with that. But let's go across to my colleague Darshita, standing by with another list of stocks that will be in focus. Over to you, Darshita.
Right, here are some stocks that could remain in focus on the back of key corporate developments, and starting off with MOIL, where the company has announced a joint venture with Madhya Pradesh State Mining Corporation for manganese ore mining, where the MOIL will hold a 51% stake and the latter will hold a 49% stake. Importantly, the proposal has already received approvals from DIPM and Ministry of Steel. Another stock to watch is Amber Enterprises, where the company has incorporated a new entity in partnership with Singularity Dare Electronics to tap opportunities in medical, defense and aerospace electronics. Now this move is in line with Amber's effort to expand beyond its core consumer durable business. Moving on, travel tech player, which is ixigo, is acquiring a 54.66% stake in Brevi Stay Hospitality for nearly 66 crore rupee. Now, Brevi Stay operates India's largest flexible stay hotel network, enabling both short duration and overnight bookings, which could strengthen ixigo's presence in the travel and hospitality ecosystem. Zee Entertainment will also be in focus as the board is scheduled to meet on June 10 to consider an equity fundraise. Meanwhile, in the cement space, Andhra Cement has approved its merger with parent Sagar Cements. Now, the proposed share swap ratio has been fixed at 29 Sagar Cement shares for every 98 Andhra Cement shares held by minority shareholders, subject to regulatory and shareholders' approval. And finally, keep an eye on Sedimec Mechatronics and AG's OPEC terminals, where lock-in periods are ending for around 3% and 67% of the respective share capital.
All right, Darshita, thank you so much for joining us with that. And keeping with the RBI then, the central bank has issued draft amendment to interest rate on deposit directions. The 2026 central bank has proposed tighter disclosure norms for deposit interest rates. My colleague Ankur is now joining us with the details for this.
Yes, Reserve Bank of India has released draft norms for deposit pricing for banks, and it is interesting at a time when there were allegations on one particular bank regarding the dealings for the bulk deposits. Now, what is the draft norm saying? The draft norm is mandating the banks to, of course, disclose the rates on the website, but here the differential pricing is also allowed. How this differential prices will be allowed on bulk deposits? You have to factor in the LCR, and accordingly, based on the runoff rate, this can be decided. However, there needs to be proper policy for that, but the differential rates for bulk deposits have been suggested in the draft norms by Reserve Bank of India based on the different runoff factor as per LCR. So all in all, what Reserve Bank is saying, give us your comments on these draft norms, and we may see differential pricing happening in bulk deposits based on these suggestions very soon.
Let's move on then, and we have eyes on the Indian IT amid the sell-off on Wall Street, pressure on the chip stocks and fears gripping the entire IT basket. Darshita is now joining us with the analysis of what can we expect.
Right. Investors should keep an eye on Indian IT post what happened in the US market over the weekend. Now, the sell-off on the Wall Street was quite severe. The Nasdaq plunged more than 4%, marking its worst single-session decline since April last year. The S&P 500 fell nearly 3%, while the Dow Jones lost close to 700 points. However, the real pain was visible in the semiconductor stocks. The Philadelphia Semiconductor Index tumbled over 10%, wiping out nearly $1 trillion in the market value in just one session. Stocks such as Marvell Technologies, Micron, Intel, AMD, and Broadcom saw a sharp decline, with some of them falling in double digits. Now, what's important to note here is that this wasn't driven by any company. Instead, the investors appeared to be unwinding their positions in the high-flying AI and semiconductor trade, triggering a broad-based risk move off across the technology stocks. Now, bringing it back to India, FIIs have already pulled out more than 2.5 lakh crore rupee from Indian equity this year, and a global risk-off event of this magnitude could keep them cautious in the near term. Now, as far as Indian IT is concerned, valuations are already below their long-term averages. So the concern is now less about the valuations and more about the sentiment. And the market environment like this, mid and small cap IT could also see the sharp reaction in addition to the large cap IT. So yeah, IT pact is also expected to remain in focus today as investors assess the impact of the global technology sell-off.
All right, so eyes on IT. This is what we are going to be tracking today. IT that has already seen a sell-off is likely to see a bigger drawdown today on account of the global handover, which has had a negative impact on the IT and the semiconductor stocks. Now, the AI trade is reshaping the global markets, creating winners across sectors and geographies. But while the global investors are chasing the AI-linked opportunities, question still remains over whether India has enough listed plays and how quickly Indian companies can translate AI adoption into earnings growth. Let's listen in to what the key market veterans had to say.
We're probably tracking around $900 billion of capital spending this year, rising to maybe $1.25 trillion next year. These are very, very large numbers, even relative to the scale of overall global economic activity. But the addressable market is obviously very large in and of itself. It's around employee compensation and changes in the way that capital, in this case the AI capex, works with human resources and labor.
We are seeing productivity asks from customers on existing work. Okay, and then there is some new revenues also kicking in, but at this point of time, that is not able to fully offset the AI trade, which is benefiting a couple of markets disproportionately. So there has been underperformance. The valuations have moderated. Okay, but I think what you really need is a little bit of clarity. Firstly, on the Middle East situation. Okay, and I think on the AI side, I think if things moderate a little bit, the excitement moderates a little bit, that could also help India.
I don't think that the market is being irrational in trying to think about what AI means for economies in general. And then for India in particular, given that we're sitting and talking about India, I think we're at the very early innings of enterprises understanding how to deploy AI, deploy it at scale, and in the first instance, deploy it for productivity gains.
All right, with that, it's time to pull down the curtains in this edition of Market Cafe. I'll take your leave. Thank you so much for tuning in. Don't go anywhere. The market is coming up next.